Hello there traders, welcome back to another video. In this video I'm going to show you how to use the power of 3. Very simple. This is going to be a quick video, but you're going to understand everything. And by the way, happy new year everyone. I hope you are safe and you don't have scars on your faces. That's all I want from you guys. So let's begin with the video. You can also read the disclaimer here before we begin. You can pause the video so that you can read everything here. Let's begin. This is the topics that we're going to cover in this video. You are going to understand the power of 3, the AMD, and then the tricky part of using this AMD and power of 3. It's almost the same thing, and then we'll also provide some few examples here. And also guys, if you enjoyed the video, please like, comment, also join our free Discord and our free Telegram. It's all free, and you will also get this PDF from this video for free inside the Telegram group. So let's move on. So to understand easily the power of 3, guys, you have to understand that we have 2 candlestick patterns. Then we have the bearish, and then we have the bullish here. So from here, guys, you have to understand the open of each candlestick, and then you have to understand the close of each candlestick. The same thing that is almost the same on both candlesticks is the lowest price and then also the highest price. It doesn't change. The only change is that the bearish candlestick opens at the top, and we can see that this one opens at the bottom. So meaning, let me clarify this to you guys. Meaning from here, let's say we open here, because we already know the close is here. Then we make a high, we have a high here, and then we have a low here, and then we close. If we are on a building like this is a building here, never mind my drawing. If we are in a building like this, right now, that means we started from here, but right now we are on the entrance here. So that means this thing has fallen down, okay? That means we are going down. The same scenario applies on the side. It's the same thing. It's just the same thing, guys. We open from here, and let's say this is your heel, this is your here. You must close at the top here. So that means right now you went higher. It's just simple as it is. But the only thing that is very important right now is the open here. When the market open, let's start with this one here. When the market open, it will consolidate and then shoot to the upside. This is what we need here for our entry. And then we will wait for the market to make a low and then close around this areas here, or even here when the market is moving. It just depends on how the market will be moving on that particular day. So let's move on to a more practical example maybe. We have a open. This is your open. And then we have a low, This is where we will be looking to enter the market. Even on this side, as you can see, these two here are very different. We have a high and then we have a low. Here we have a low and then we have a high. It's just vice versa. Like this, we open and then we make a high, okay? Here we open but we make a low. You have to understand this very clearly. So after this, we have an example here. We open, then the market consolidate and then make a new low. So that means right now, the market might be like this. It has opened like this, still doing something like this. It's red right now, still red. Here on this line here, no. Here on this line here, this is our opening price. Then the market will be doing something like this. It's still bearish. Okay, the market is still bearish like this, and then it will leave a low like this, and once it pushes to the upside like this, it will change color to become low. Okay, once it crosses the opening price, because right now we have a low. So the only thing that we need right now is to make sure that we enter the market right here. This is where we are looking to enter the market. Even from this one here, once we open and we make a high, we will be looking to enter the market with the highest price here to go short. But you have to be very careful, guys. Sometimes, let me show you some, because this is just a video. I have seen a lot of examples. We open here like this, the market consolidate, and then it shoot to the upside, and then suddenly it dropped to the downside, but then it got rejected very quickly and moved to the upside again. So right now you have a huge accumulation phase here before a manipulation phase here. So you just have to be very careful, guys. But once you understand how to read price action, everything will become a little bit easier to understand. So let's move on to another example. So as you can see from here, we can clearly see that price shoot to the upside after making this low here, and the market opened slightly around here. It consolidated, and then here, this is where you can see some momentum. What I mean by momentum is that you can see these candlesticks are very short in body, but then suddenly we have a sharp move to the downside, and then we started to see some moves to the upside. And for those who were watching my videos before, I believe you know this candlestick pattern here. This one here. You see this candlestick pattern here will tell you a lot of information. This here. If you don't know it, please, I have made that video before, I believe. You just have to go and check it out, because it will tell you the direction of the market. Like these 3 candlesticks here, they will tell you the direction of the market. I will try to show you another example when we move forward with this video. So let's move on to another example. This is where the accumulation and manipulation and distribution phase will work, but it doesn't always work like this. It doesn't always work like that, guys. This is just a structure to demonstrate. It doesn't always work like that. That's not how the market moves. The market will move how it likes. So there's no God in trade, guys. This market will bully you. I just have to be real. So we have a open here, the market consolidate. This is your accumulation. This is a building price. This is where the market will build price action so that it can scam you when it make this manipulation before it can make this distribution to the upside. This distribution, guys, sometimes it can be a little bit super impulsive, but it doesn't really have to be that super impulsive. Sometimes it can be a little bit slow like this, or while we're having this move here. This one here can still be slow. So you just have to be very careful like that. You just have to be able to read price action on this side. So let's move on. So from this example here, guys, I'm going to show you step by step on how this candlestick will form. Here we have a open. The market will open. Let's say this is your daily candle. It works on all candles, guys. This is your daily candlestick here. The market will open, manipulate. Right now, we don't know if whether the market will break to the upside or to the downside, because right now we're still ranging here. But once we get a move to the upside or once we get a move to the downside, this is where we can predict where the market might be trying to go. So let's see how the market behaved, because right now we have the accumulation phase here. Okay. We have a high and then we have a high. The market is on this. So this one here, this is your manipulation phase here. We have a manipulation phase here. So right now, let's wait and see how the market behaved. Okay, so that means the market shoot to the downside after this manipulation, after the manipulation here. So let's double check. We have the accumulation, we have the manipulation, and then we have the distribution. And also we have the open, the high, the low, and the close. If right now we draw this candlestick, it will be the open, and then we have a high, and then we have a low, and then we have a close. So then this is your body here. Never mind my handwriting, guys. So your candlestick will look something like this, but I don't think I'll be able to draw it properly. Yeah, it will look something like this. Because it's bearish, we have to use a red color. Yeah, something like this, guys. This is your candlestick. This one here was just a demonstration of this candlesticks patterns here. So let's move on to another example so that we don't have to waste time. This is the tricky part where you have to be strong, but sometimes the market will always stop you out, guys. Let's be realistic. This is 2025. Let's be realistic. The market will stop you out. Who said you'll win all trades every day? You'll have some best weeks, yes. Some worst month, yes. This is trading. This is not a child's play. Let's move on. So there will be some candlesticks, because I've seen a lot of videos that are covering this topic here. They don't cover this candlestick here. Even though you will be waiting for the market to give you that one candlestick per day, the market sometimes can give you this kind of candlestick that opens and shoots to the upside. Let me show you something. It opens here. It has a high and then has a close. We don't have a low here. So that means the market opens here and then shoot to the upside like this. Maybe let's say the market was just made this before it can move to the upside. You just have to look at the market like in two different ways. So from here, let's say right now, this candle is not ready to close. And then you see that, okay, the market was consolidating here and then you shoot to the upside. Okay, right now, you'll wait for it to break this structure. And then it breaks it. And then once it comes to this area, you sell. Okay, sell, my guy. But then the following day, this candlestick will do something like this. will accumulate you, manipulate you, and then shoot to the upside. This is your distribution. So we have to look at the market in some sort of different ways so that you can understand it. Okay, so let's move on to this one here. I just made this example so that I can make this video a little bit challenging, because if I make it easy, nobody's going to understand this kind of thing. Because once you learn difficult, when you look at the market, you know what to avoid. Don't always try to trade head and shoulders every day. Yeah, move on. We have this candlestick here. This red line here separates these two candlesticks. The market will do something like this. Opens here. This is your A. It's your, let's say maybe you caught this distribution here. But then suddenly the market come and close near, maybe let's say near your entry point. Let's say right now you are in profit with at least 20 pips or so, but you were in profit of, let's say, 100 pips. You know a thing, what you call greed, right? This is you right now here. It's either you close or you wait or you manage the trade properly. But let me show you some few mistakes here. You enter a trade here. This is your entry. Let's say your stop loss is already on break even. You are in profit, let's say 20 pips. Okay. Before you were in profit with 100 pips. So right now the market will open for this candlestick. It will do something like this. Then from this side right now you have 10 pips. It's either you close or you close in break even. You decide. It's your choice. But then the market was just making the same thing here, but in a different way. This is your A, this is your L, this is your D on this side. So I know some people will do something like this. Will close and then cry when this move happens. Okay, I know I've been there, and I know some of you who are watching this video have been through those things. I know you don't have 2 weeks ago. I know you. Yes. You can comment below and tell me if I'm wrong. So guys, let's move on with the video. I hope you understand the scenario that I'm telling you here. Okay. Even if you move your stop loss to the highest point here, the market is so stupid it can even do something like this and then stop you out and then move to the downside. Never trust this market. Don't just put any money into losing there. So let's start with the first example, which is gold here. You can see that price has already broken this high, and then we have this candlestick here. This is your bearish engulfing candle, and we are on the 12 hours time frame. Also, we are on the supply zone here. And we can clearly see that the market was very aggressive to the downside and then it started to be slow. So for the next candlestick, let's wait and see if the market will open, shoot to the upside, break lower, correct, and then give us an opportunity to enter here. So what we clearly want in the lower time frame is that we need something like this. We need a move to the upside to make a high, and then we need a break of structure, maybe some breaker blocks here, whatever you call them. And then you will be looking to enter the market. Here is your stop loss. This is your TP. Okay. So this is what we want for now, because we have the higher time frame analysis and we can still have a target here. Because I see a lot of people are afraid to hold their trade for a very long time. I still have a trade that is running for like 2 months or so. So let's move on to the lower time frame, which is the 1 hour. Right now, we can see that the market is still playing around. The market is just consolidating here. So we are waiting for a spike to the upside, a break like this. Okay, so this is what we want right now. And guys, we can clearly see that we have 1, 2, 3 bullish, okay? And then we have 2 red. So this is 3 versus 2. But this one here is very powerful. It doesn't work hard like to move price. It only worked only 2 hours. But this one worked only 3 hours to achieve only a small move. But this one achieved a lot. So that means this one is working smart. This one is working hard. But the results are very different. This one is working smart with the huge result. So for now, here what you can do is that you can see that we have a zone here. This is your supply zone. This is your supply zone here. Supply zone. So that means the market might shoot to the downside. And we also have a confirmation candle, which is also a rejection candlestick here. So you just have to understand how to read the market. And also another confluence is that we also have the higher time frame analysis. Okay, so that's how you should understand how to use this. So let's move on. You can clearly see it moved, and your target, you can also target this daily lows, the 12 hours lows here. Don't be greedy. Even if the market is still moving, why? Take your profit and go. Leave others with some sense or something. Unless if you're greedy, they will come and take your money. Yeah, so let's move on. This is the GBP USD weekly. Let's say right now, we don't know this candlestick here, but we have the previous candlestick, which is the high, which is the low. I know some of you will say this is a what do they call it? CRT, candle range theory or something. It's something like that. Guys, don't come up with new names. This is just lines. This is just lines and candlestick. What more? I'm just making this video for you to click. But next week I'm going to make a CRT video. But I'm going to use my own format. Just show you how this thing is just rigged, guys. So let's move on. We have this low, we have this high, but we don't know this candlestick. This candlestick might appear like this. It might do something like that. We will never know. It might even do something like this. We will never know. Nobody is going to know the next candlestick. Never. All we are doing is just using our theories to apply them on our chart and then understand how the market behaves. All in all, we will never understand how the market moves. So let's move on to the lower time frame. We can see that the market is still ranging here. It's either we break lower to predict the market to move to the upside, or we break to the upside to predict to the downside. Okay, this is a box. If I go higher, I must come down. If I go down, I must come to the upside. Just like that. It's like something like, I don't know what to call it. Yeah, something like this. I'll just call this a fish strategy if I want to. Let me stop with these funny games. Let me be serious. So guys, from here, we can see that, let's move on, wait and see. The market shoot to the upside. Okay, correct. And then we have this. Who is working stronger here? You can see this is the 4 hours. So that means it took them 12 hours, 12 hours to push the market to here, only like this distance here. That's very small. So the bearish only took let me just say 4 hours with this candlestick alone to break the low here and to break the high here. Only one candlestick. One. So who is stronger right now? So that means the market is likely to be bearish. And right now we can see that we have already broken to the upside. So here, so that means we will be looking for a retracement to smash here and then to go lower. So let's see how the market behaved. Okay, this one is pretty simple from here. Very simple to enter here. We have a zone. I'm not straight, guys. Never mind. I mean, I'm straight. Don't take it literal. This is your supply zone. Supply zone. When the market returns to the supply zone, you have to wait for the market to touch at least here and then close bearish. Even if it did not touch with this one, it touched with this but closed bearish with this candlestick, you can still enter here because this is a bearish engulfing candlestick. A bearish engulfing candlestick, guys, like this. Let's say this is your, let me do something like this. Okay, we have some, yeah, this is just for example purposes. After here, let me use this color. When you see a bearish engulfing, the next candlestick is likely to come and retest here and drop, or here and drop, or here and drop. But this one, I have covered it in another video. Just watch the previous videos that I have posted since last year, the one with the white thumbnail only. You will understand what I mean from here. So guys, I guess this is the end of the video. I hope you have enjoyed it. I guess I'll see you on the next one. Please don't forget to subscribe to the channel. Now, this year we're reaching 100,000 no matter what. I'm just going to keep it real with you guys. If you subscribe, more content. See you tomorrow. Subscribe now. I'm watching you. I'll wait. I'll just push the video to 32. Okay? Bye-bye.